was a good morning from him, and of course it's a very good morning from me. Hope everybody's well. Welcome to my mortgage live stream, or my financial advice live stream. Call it what you like, but it's all about mortgage and financial advisors, and we've got a great topic for you today, which is fresh from the FSRE new syllabus that's coming in for the CeMAP. You probably heard about it in autumn. We've got the new CeMAP one's been completely revitalised, and about time too. They've done a good job as well. So I'm going to give you a topic based upon the new syllabus as well. So we've got that coming up. We've also got a little sales tip for you as well to help you, a little idea that will help you think about the future in AI. So that's coming into stream in a very short amount of time. Well into August now. Schools are well on holiday now. The streets are empty. Everybody's on holiday, and the weather's pretty grim out there at the moment. So I hope all is well with you, and you're gearing yourself up ready for the autumn and the busyness that we're getting ourselves into, with the economy beginning to move in the right direction. We'll wait and see what happens, of course, with the economy. We really don't know, do we, with what's going on. There's a budget and all sorts of things happening, but we'll see. Inflation, maybe it will come down later this week. We'll wait and see. Well, not inflation, I say interest rates will come down as well. But what does all this mean, this interest rates, inflation and balance of payments and Trump's tariffs? What does it all mean? Well, what I want to do is take you into a session straight from FSRE, which may be new to you, may not be. It might be a nice little refresher as well, but it's in the new syllabus, which has been examined from September onwards. And we're obviously updating all our material. So let's take a look at the subject of government managing the economy is where I want to go with this one. Managing the economy. So let's take a look at how that all works and all those good things. We'll take a look at business cycles, then we're going to take a look at balance of payments with you. So business cycles then, what are they? Well, let's just put a little screen up for you so you see what we're about. The business cycles. We're talking here about how the economy runs. And we talk about a business cycle which has a cycle effect. So let's pop over to the whiteboard and we'll talk about the business cycles, shall we? Let's pop across here now. This is one that I prepared earlier. Now, in a business, in an economy like the UK economy, it goes through a cycle. And there's never any stop to the cycle. It always goes round and round and round in any capitalist society. Now, it doesn't have to start anywhere, but I'm going to start with boom time, because that's a pretty good place to be, isn't it? Now, in boom time, and I don't think we've seen this for a few years, this is where you have high employment. Everyone's got a job if they need a job. That's boom time as well, isn't it? You've got rising prices. You've got prices going up because there's plenty of demand for goods and services. You've got GDP growth, gross domestic products, growing 2, 3, 4% a year, and everyone's really happy about that. You've got exports doing really well. We're exporting across the world, our trade and services, and demand from consumers is high. That's boom time. We haven't seen that, I don't think, since pre-Brexit. I don't know. We'll wait and see. Now, what happens after a boom? Of course, booms come to an end, and then we have what's called the recession, which we hear a lot about these days, don't we? We have a recession. Now, in a recession, what's happening is that things are beginning to fall. Consumer demand falls. And we've seen that in a number of situations. The financial crash in 2008, we saw it in 2022 when interest rates started to go up. Consumer demand falls because confidence begins to fall. Exports go down. We're not exporting as much. All sort of activity in the economy starts to reduce. Unemployment begins to tick up. In other words, people are losing their jobs and can't get new jobs. That's beginning to tick up as well. Prices are falling. This is an interesting one, isn't it? Prices are falling because the economy is beginning to tank a little bit as well. Investments decline. Basically, GDP begins to fall, is what we're looking at with a recession. It's not reached its pitch yet, but it's beginning to fall. Now, arguably, we're probably there at the moment. I think we're in and out of recession at the moment, with GDP being recognised as such. But prices aren't falling, are they? So we got things mixed up going on here as well. Now, if you're unlucky, after a recession, you'll get what's called a depression. Now, this isn't somebody after their exams, they just failed it. It's not that kind of depression. This is an economic depression. And they're pretty heavy duty things. Basically, what's happening here is that businesses are beginning to fail. So businesses failing. Now, obviously, businesses can fail in a recession. Of course they can. But most tend to survive until it picks up. But here, businesses begin to fail. And you'll have mass unemployment. Unemployment. Now, we've not had a depression, arguably, since the 1930s, and that was before even I was born. I tell that to my daughter. She thinks I was born during the war, but I don't think she believes that anymore. But the point is, though, we had mass unemployment in the 1930s, in the early 1930s. Financial services world in 2008, I imagine, was a depression in that sector. And obviously here you have prices are tumbling down, prices tumbling. We had a few countries after the 2008 crash where we had depression. Arguably in Iceland they had depression, Greece had depression, a few countries did. We just escaped it, I think, when it came to depression. Then of course you have recovery. Da-da-da-da. Recovery is where everyone's happy, everything's tickety-boo, things start to improve, don't they? Confidence is the big thing. Consumer confidence, business confidence is rising. We had that. The budget last year probably killed it, but that's politics. But the fact is that confidence must be rising if there's going to be a recovery as well. Here you have falling unemployment. You still got unemployment, of course, from the recession. It's beginning to fall now as businesses start to recruit more people. But with the national insurance drop last autumn, that's actually not happening at the moment. Consumer spending increases. Now, we are a consumer-led economy, spending up. Obviously, businesses buy and sell as well, but we're not an exporting economy, which I'll look at for you in a second. And of course, businesses start to grow again as well and expand. New businesses are started up in a recovery. And that's the cycle, which we talk about a lot. Where are we at the moment in this country? Probably between recession and recovery, I would hope. I'd like to see the seeds of recovery or the first signs of recovery coming in, and then maybe we'll get into a boom before the next election. We'll wait and see. So that's the business cycle. So how then does the government manage this? Because, as you know, the UK government must make this happen. They want this and this. They don't want recession and depression. So they try and manage things to make that happen. Whether they get it right or wrong is entirely up to what they do. But they have economics, what we call micro or macroeconomics. Let's take a look at that lovely topic, which you've probably read about somewhere along the line. Micro or macroeconomics is what we're talking about. The government's role, therefore, is to manage the macroeconomic scene. So what is the macroeconomic scene? Now, give me a metaphor, what we mean by macroeconomics. Now, I like to look at a forest. Here's a photograph of the Amazon forest, I think. Now, when you look at the forest in its whole, that's when you're talking about macro or macroeconomics. We're looking at the whole ecosystem, aren't we? You know, the climate, the country, deforestation. We're looking at the whole picture as opposed to the small detail. If you go into the small detail, here's a picture of drilling into the Amazon forest there for you. This is microeconomics. This is more the detail, you know, what kind of plants are growing, what's the system around a particular stream, what's the soil like in this particular area. It's the detail microeconomics. The government's job is to manage macroeconomics. Let's take a look at what we mean by that. I'll give you a few examples as well. Let's pop across to this whiteboard now when we're looking at government macro and micro. Well, first of all, micro, we'll put that one across here for you. An example of microeconomics could be Sadiq Khan, the guy that runs London. Now, he's the mayor and he's only given limited powers, and one of his powers is transport. So the London mayor, of course, only looks after transport in London. Now, that's a big thing, don't get me wrong, when we're looking at buses and tubes and stuff like that, and ULEZ zones and stuff like that. It gets in the news, but it's not a big deal, really. There's more to London than just transport. So that's an example of micro. If we look at the housing market, for example, the housing market with the micro lens is looking at particular areas such as the northeast or the southwest or Cornwall. It's looking at local consumer demand, what planning permission's been given for housing developments, that sort of thing. That's at the micro level, isn't it? Now, the macro level, as we said before, is the bigger picture. That's when you have the UK government involved as well. So we've got the whole of the UK. Let's just quickly draw my picture of the UK there. Yeah. It's the whole of the UK. It's not very good, but you know what I mean. It's not looking at a particular area. Here, for an example with housing, would be the rising house prices across the UK, the inflation rate, interest rates, the unemployment record in certain areas, of course, black spots. That's the macro housing policy coming through there. Now, when it comes to managing the economy as a whole, the UK government, so let's just put our little Big Ben in there for you. There's Big Ben in there for you. The UK government would be managing the economy with controlling inflation is macro, unemployment control is macro, exchange rates is macro, interest rates, of course, are macro, stimulating the economy using fiscal or monetary policies. That's all macro stuff. So that's pretty much where it comes to. So what then does the government need to do when it comes to, of course, the government, the UK government has a number of policies which it's going to put into place. And the government macroeconomic policies, well, there's several of them, aren't there? The most important one, as we've talked about before, the most important role of the government is to grow GDP, gross domestic product, the value of the entire economy. They need to grow it. They don't want it falling. Naturally, which is why you often hear, government wants to grow, growth policies, that sort of thing. The current Labour government is all about growth, isn't it? And it'll get there because it's making it its number one priority. So how then do you grow GDP? Well, there's loads of things, but the government's got 5. You can read them on the screen there. High employment, of course, is key. Controlling inflation is still a key government role. Keeping that inflation above and below the 2% target is key. Managing the national debt's become more and more important now. Rachel talks about her fiscal limits and the things she's not going to negotiate. She doesn't want to borrow money to pay for everyday financing of the government or of the country. It's a bit like you earning a salary. Would you use your credit card to fill the fridge? You might do as an emergency, of course, but you want to use your salary to fill the fridge, not by borrowing. It's the same concept. We want to manage the debt. The green transformation, of course, Ed Miliband and solar and all those things, massive, just the right thing to do. It should be a main government priority. But the one at the bottom there, balance of payments, often gets missed out or forgotten about or just ignored because it's very complex. So let's dive into what we mean by the balance of payments. So first of all, what is the balance of payments? Well, the balance of payments is a government KPI, key performance indicator, on how the country is doing compared to the rest of the world. Are we exporting goods and services and importing goods and services from other countries? And are we balancing the books? Simple as that, really. So we import goods and services, don't we, from various countries, China, Japan, US. We export goods and services to other countries as well. And the idea is that the payments should balance. And do they balance? Do they not? But we'll take a look at how that works and what the government does to try and balance, because you have to balance them. You cannot not balance them. It's a bit like your budget at home. You can't not balance it. You may make it work with a credit card, but you're still balancing your trade, if you like. So let's take a look at some of the images of the balance of trade and the balance of payments. There's a lovely little graph here, which I love this one, actually. This one's quite a simple one. Since 1970, it tells you where our balance is going. So we've got 40 or 50 odd years here. Now, the red indicates balance of trade in services, and the blue is balance of trade in goods. Now, good is a physical thing, of course, like a piece of machinery, a car. With services is something which you sell abroad, like architectural services or lawyer services or training. I mean, I have clients in the US, so effectively I'm selling my services to the US. So there you see in the 70s, it pretty much was balanced. We had equal trade in goods, equal trade in services. But in the 1980s, things changed. In the 1990s, things began to change even more. In turn of the century, it really changed and the chasm began to open up. Our ability to trade goods abroad has plummeted. And that's been well documented. We don't make things so much anymore. We do, actually. People don't think we do, but we do, but not the mass production we used to do. What we're now focusing on is services. We're very good at services in this country. People buy our lawyers, our accountants, our architects, our trainers, and they buy them and pay us money. Hence your trading services. Now, as you can see, the two should balance each other out, so it's nil. And we're aiming for a nil. This graph gives you the trade balance, or the current account as we call it, again since 2020. The trade balance is around about the nil. We've had our ups and downs. Obviously COVID didn't help, did it? But you can see there goods has fluctuated dramatically and services is pretty straightforward there, as you can see. But we're just about balancing the books. But what's gone wrong? Well, lots of things go wrong, don't they, with it? And one of the biggest ones in the news at the moment is this man here, Trump's tariffs. Of course, it's been in the news, and what he's trying to do, of course, is put tariffs on imports. Now that's going to muck up the numbers, because suddenly your imports become more expensive, and your exports and the whole thing just completely becomes wrong. What Trump's trying to do, of course, is to make America export as much as it imports. That's what he's trying to do. And if he can make imports more expensive by putting a tariff on them, it will stop countries importing as much as they can to the US, and the US can then pick up the manufacturing and start making things. So in theory, it works. In practice, we'll wait and see. But what he's done, of course, is he hit the world with 10% tariffs as US ignites a global trade war. And we've seen him do that poster then at the White House. So what's happening then? Well, we'll wait and see what's happening. We've got a pretty good deal, we think. We'll wait and see. But the government's main priority, though, is to keep the balance of payments correct. We've got a deficit. We don't want a balance of payments deficit. It needs to balance, remember. So how does the government do that? How does it correct a balance of payments deficit? Well, it uses a number of macroeconomic tools. Let's take a look at some of these, shall we? The currency value fluctuations is the first one. Now, we talked about Forex last time, didn't we? The pound is always fluctuating with other currencies. Since we floated this in the late 1970s, the market determines the value of the pound according to other currencies, and that movement can actually correct a deficit. So changing a country's balance of payments can cause fluctuations in the exchange rate. That's really what we're saying here. Inflation, interest rates, account deficits, trade balances, and public debt all affect exchange rates. And the movement of the exchange rate can actually help us to balance the payments. Because if you make things more expensive to bring into the country, we'll import less. And if you make exports cheaper for us to do and more beneficial for countries abroad, we'll export more. And the value of your currency determines that. Let's just take a look at some numbers then, because I like to look at a few numbers and things. Let's get out of the way here. This graph here talks about the tumbling British pound since 2000. And you can see then that the pound and the dollar, this one, varies enormously according to what's happening. And it's usually crises that cause it. So they're the 2008 global financial crisis. The pound plummeted, as you can see, because of confidence in our banking system and all sorts. The other one, of course, is Brexit. The vote then in 2016, the pound plummeted because the confidence in the country was at an all-time low. So these are economic events causing the currencies to change. Obviously, it picked up since then, and 22 it came down since the budget in the autumn of 22. We had the bond market issues, and the pound and the US dollars has fluctuated enormously. Now, I looked at the numbers for you this morning. We've got a pound buys you $1.3. It's getting better now, actually. It's improving. And what I'm saying there is that the exchange rate, which is the market determines it, nothing else, will balance the books for you. Because when it's more expensive to import, we stop doing it. And when it's easier for us to export, we'll do more of it. And that's what currencies tend to do. Interest rates can also manage the economy for us. Interest rates can manage the balance of payments. How does it do that? Well, the Bank of England may adjust rates to stabilise the balance of payments. Now, obviously, it adjusts rates for inflation targeting, but it can also do it for the balance of payments. And it may have to do that if it's forced to do so. How does this work? Well, higher rates attract in foreign capital to balance the payments, and that's the secret not a lot of people know about. But of course, it can make borrowing more expensive. Now, if we've got trade and services causing a bit of a deficit, it's plugged by capital inflows. The current account is the trade and services. The capital account is money coming into the country, people buying our bonds, people investing in the UK. We have to bring money into the UK to balance the payments or balance the account payments itself. Because you've got to balance it. So if we're in a position where people are putting lots of money into the UK because interest rates are high, then everything's fine and we can balance. But of course, we don't want to do that because high interest rates cause all sorts of issues around borrowing and inflation and everything, don't they? So that's a nice little summary there for you of business cycles and the balance of payments. I hope that's been interesting. Bye. Well done. Quite a heavy one, that, I suppose, you think about it, but at the end of the day, it is important, and it's in the new syllabus. So you've got to think about that. The new FSRE syllabus, CeMAP 1, tends to look at more macro issues as opposed to the micro stuff that the old CeMAP 1 did. But again, we're just revising all our materials and videos and things, and that's why I did that video for you as well. Hope you found that interesting. Let's finish off by something more insightful for you. This one's called the Glastonbury effect. Why trainers should start to think like musicians. Let me explain what I mean here. This year, as every year, I'm going to binge watch the famous Glastonbury Festival live. I mean, I ping around BBC iPlayer and I get to watch the best bands in the world perform live on the various stages. Now, the most incredible sight, as far as I'm concerned, is watching the many session musicians plying their trade at Glastonbury. Now, session musicians are the hidden gem of the music industry. They're usually much better instrumentalists than the rock stars, but of course get none of the limelight. They don't want it. They prefer to be paid a salary for their labour. Now, digital streaming has drastically increased the amount of music released nowadays, and AI is even producing its own tunes. As a result, these session musicians are in higher demand than ever before. However, digitalisation has diminished their role. They're now paid a lot less, although they have a lot more work than ever before. You see, digitalisation has meant that their role is not as specialised as it once was. Streaming and social media now pours the money into a few stars, usually solo singers who do well on social, such as Taylor Swift or Charlie XCX. Bands are not as popular in the streaming age, although they're still popping up at Glastonbury. So what's the metaphor here then? Well, corporate trainers and corporate speakers, the session musicians of their trade, behind the scenes doing a sterling job, but increasingly being replaced by AI. The stars of the training and speaking world are individuals who can effectively utilize social media to build a loyal fan base. They're adept at YouTube, they have expertise in both online and on-site, able to utilize technology to deliver their knowledge in any format they can master. It's the person, it's the human, it's the brand that will survive long into the future. Now, the finest session musician ever was arguably Mick Ronson, who played for the band Spiders from Mars in the 1970s. Answers on a postcard: who was the lead singer of this band? There you go. I left you a little quiz there. Answers on a postcard. That's showing my age, isn't it? We used to do that. It used to be on TV, answers on a postcard, and you had to send in a postcard with the answers. Now, of course, it's all done on social media, isn't it? Quite a long live stream. We're going to be putting more of these on during August and September with the new stuff coming into the syllabus as well. So you might be interested in listening up to see what's going on. As always, let's see if you want to keep abreast of issues. As always, we keep you informed of everything, don't we? So here's our QR codes you get on a Mortgage Advisor Development Hub. I've got a webinar this week which is going to tell you all about the new changes to the exam, which you might be interested in. And I've got this coming up for you this week. I've got it at, where are we? I've got it on Wednesday evening, 6 p.m. UK time, Wednesday the 6th of August. I'm going to talk to you about all the changes in the CeMAP exam. So if you want to get onto that webinar, you have to be on our mailing system, our member database. You get on there via that method as well. Other than that, my friends, I will see you all again next week. Have fun, enjoy the sunshine, and we'll see you then. Bye.